All right.
Hey,
Good morning.
check that out. Oh, I'm not exactly sure if this is working, but it's kind of exciting.
It is exciting.
It's totally exciting. All right. So in the business world, I gotta ask you about this.
Okay, let's hear it.
The New York Times is reporting today, Mr. Piles, that Yahoo's chief executive Marissa Mayer, who I think is doing a spectacular job,
Okay.
and I will say for the record that she may be of the 200 people that have been the CEO of Yahoo in the last 10 years. She's probably she's good she's good enough to run any company in America. I predict that she will run a Fortune 10 company.
Nice. Okay.
It won't be Yahoo, by the way.
What if she offered to run your company?
I
Would you do it?
would. She could run my company anytime. she, I'm talking. I'm talking business. That was not a euphemism for anything. That was strictly business. No, really. She could. She would. That's funny. That's just ridiculous. She would probably kill me. One of her first acts as CEO was to downsize the work at home workforce. She's like, let them go. She's. I don't even think I mean, she might have given them the option to come work in the office,
Yeah.
but she said everybody's going to work at the office now, and there's big uproar about that. And I thought that was kind of funny. Like in today's technology economy, Jason, workers have become so entitled that they're like, what? You want me to come into the office?
Right. Right.
like like they're the company and they're just doing a favor by helping the company out. And everybody who's ever worked from home knows that their productivity is high. There's no question about that. There's no question about that. And their communication with their workers is reasonably stable, and in fact you probably get a lot more done because you don't have constant interruptions from your coworkers. However, your boss doesn't get to cut you down to size or restrict your corporate advancement. You don't get some of the snacks available in the cafeteria. You don't get to sit in traffic. You don't get that. You don't get to be around your coworker Betty, who has a pig for a pet. And you don't get to sit in your cubicle.
That's true.
Why wouldn't you want to go to the office?
I don't. Yeah. I don't get it.
Do you think that we as a company, Jason, and we've had some pretty good years as a company. Our podcast is successful. My
Yes.
trading education business is successful. My trading is successful. Do you think that we need to have an office?
No. No. Not anymore. When we were in the same city, that was really fun.
Yeah.
I loved that office there.
Yeah.
But no, not.
I wonder if we could throw up a picture of the office on the video that we're making for this podcast. I'll find an old picture and I'll throw that up.
Oh, I loved it.
Yeah, so if you love your office, the reason you love your office is it's more like the home you want to be in than the home you are in. When I left the office at the end of the day, I was like, oh man, I got to go home. Anyway, they say, when you die, no one says I should have spent more time at the office.
Yeah.
I don't think that's fair to people who work at like strip clubs or Disneyland or, like places that are really awesome to work. But,
Well, you've said specifically that when you're on your deathbed, you're gonna say, "I wish I had spent more time working," just to finally like deflate that once and
right.
for all.
Just to F up the whole, because they said no one. And then forever after, they're going to say no one except for Rob Booker ever said. And I'm going to say office because at the time, I'm sure I won't even have one.
Right.
Okay, Mrs. Mayer or Meyer. I don't want to say Marissa Meyer because Oscar Mayer, and I don't think she's the heir to the Oscar Mayer fortune.
Right. I don't think she is either.
She announced on Monday evening that Yahoo is commissioning 2 original TV-length comedy series that will be shown exclusively on its websites and mobile apps. Jason, everyone in the business world is making their own comedy series.
That's crazy to me.
This cannot be good.
I don't think it is.
Everyone is a TV channel now. Next thing you know, Cisco Systems is going to be like, we're making breakfast cereal and a new drama series. And
Which is
you're a television and movie guy. Why are these companies doing this?
well, I don't know. It's hilariously ironic because right at the moment we're doing an audio podcast on video, so that's funny to me. Why are we doing it? I love it.
I thought that was your idea. I thought Marissa Mayer, she wrote me this morning and she was like, pull up some video on the podcast, Booker, and we'll sell it. Technology companies like Amazon.com, Netflix, Google, Hulu, and even Microsoft are challenging traditional producers of television content such as HBO, AMC, and the broadcast and cable networks for fickle viewers. So even Microsoft is making original programming. I say that this is a trend that this is not a good idea. Not all of these shows can succeed.
Mm-hmm.
However, I think the shows that these technology companies are making are better than broadcast network shows.
Yeah, I would say that. That's probably true, but I bet they jumped on this bandwagon when Netflix started making its own programming and everything.
Yeah.
Right?
So here's the trading analogy for those of you listening to the Traders Podcast or watching today's Traders Podcast. I'm Rob Booker. We're here with Jason Piles, the producer. And we're talking about Yahoo and Netflix and Microsoft getting into the business of programming. And I think Netflix even getting into the business of original programming doesn't seem like a shock anymore. But when Netflix announced it, it was a major shock. It was a major departure from Netflix's primary company mission, which is to provide programming on a streaming or DVD basis to millions of people around the world. They now have 35 million viewers. Netflix is a company for the next century. I predict that Netflix will be bought, Jason, within the next 5 years by another major company. I would predict it's going to be Apple is going to buy Netflix in a giant deal. I mean, tens and tens of billions of dollars. Netflix has great original programming now, and its name is actually almost never mentioned without talking about its original programming now.
Mm-hmm.
It's you don't talk about The Walking Dead and Mad Men and AMC, but you do talk about Game of Thrones and HBO, and you definitely talk about House of Lies and Netflix. I mean, House of Cards and Netflix. House of Lies is on Showtime, and I'm sure Marissa Mayer is going to do House of Dogs. I don't know, but Netflix is becoming synonymous with quality programming. They spent $100 million in Netflix money to make just House of Cards for 2 seasons.
Yeah, it's tremendous. I love it. I love that trend right there. But yeah, these companies doing it, these like regular business companies, I don't know, like because Netflix was already kind of in the movie realm.
Yeah.
So I don't know why I'm skeptical.
I'm a little skeptical too. I want to upload a movie to Netflix. I read about how to do it. I want to make a movie and put it on Netflix. Anyway, Netflix spent $100 million to get Frank Underwood elected or made president. That's the least expensive campaign for president in the last 30 years, actually. It was on Netflix. It's not, of course, real. The reason I bring this up on the podcast is that we're tempted as traders to sometimes branch out into something new. And we're told, Jason, that branching out into something new is an absolute mistake and that you ought to stay solid and firm and definitely on task with what you're doing. Marissa Mayer said, don't work at home. We want to keep you on task. The analyst said, don't Netflix make original programming. We want to keep you on task. And traders are told, don't switch to a different trading system or look at that over there. We want to keep you on task. In all 3 of these instances, in every single one of them, I think that it's basically provable that the person who said don't deviate from your mission, your mission was wrong. When they told Netflix not to deviate, when people said that's going to be a mistake, House of Cards has easily added millions of subscribers to Netflix streaming. House of Cards is a conversation piece when all the episodes are released. They released the episodes differently. They hired an artistic genius, David Fincher, to produce and direct some of it and help create it. And Bo Williamson, a Tony Award-winning or almost Tony Award-winning playwright to write it. And then they released all the episodes simultaneously. They broke the mold. Netflix said, we're not just going to do what you're telling us not to do. We're going to do it wrong. We're specifically going to, and it has been a giant success. Despite all the technology sell-off, Netflix is a buy. Absolutely, Netflix is a buy. Number two, Yahoo said, come into the office. We don't want you fooling around at home. So Yahoo took the tack, said, listen, stop screwing around doing those other things at your house. Whatever you're doing at your house, we don't want it being done anymore. Come to the office. And I think that backfired significantly. That was a significant backfire. It made Yahoo a less interesting place to work. Yahoo stock is up since Mayer took over 2 years ago. Yahoo is a sell. Yahoo is not making significant enough changes or being original enough. Yahoo's now copying Netflix. I want to see Yahoo and a company. I want to see Yahoo do something that Yahoo isn't supposed to do. And it can't be a driverless car. Sorry, that got done. It can't be balloons that are launched into the air or drones that fly around the air to provide internet to people. That's been done. It has to be something on the order of what Netflix or Amazon did when they broke into programming, or Amazon did when they broke into web services and, essentially launched $1 billion business renting out their server space to other companies, which has become totally copied by 50 other companies in the cloud, is now synonymous with Amazon in some circles. Yahoo is not doing those things. Yahoo is copying, and Yahoo doesn't even have good mail. So Yahoo is a sell long term. They will most likely merge with something like Google at the point where Yahoo is no longer a threat to anybody. I would say it's more likely that Yahoo and Microsoft will team up again. That was attempted in the past. It fell through because who knows why. And then Marissa Mayer will take over for whatever that guy's name is that's running Microsoft now, and then she'll be the CEO of Microsoft, and that will make whatever I said sort of true, but I don't really know how big Microsoft is, so let's take that back. Last of all, I think I mentioned, what other thing did we mention? We mentioned Yahoo, we mentioned Netflix.
I have one to ask you about while you're thinking of that. Well, what about Amazon? Because I've heard that recently that Amazon is going to be taking on HBO shows. So they're going to be able to, I know that's not as huge as what you're talking about, but I think that's going to stick Netflix a little bit.
Right. I watched all of Betas, which is their precursor to HBO's Silicon Valley. So Betas is like a show about a bunch of geeks trying to launch a company. Compared to Silicon Valley, it's the difference between Raging Bull and Grudge Match. Raging Bull, starring Robert De Niro, maybe one of the greatest movies of all time. And Grudge Match, maybe one of the worst movies of all time. Betas is Grudge Match, maybe one of the worst shows ever made about technology. And Silicon Valley is maybe, by Mike Judge, the creator of Office Space, is maybe one of the best series on television right now.
Wow.
Great character change, great, just great everything. So Amazon is not doing a great job of that, but Amazon is being pretty heavily criticized for raising their Prime subscriber fees in order to pay for this original programming. I think you'll see Amazon do much better. I think Amazon's the one that hired Chris Carter of the X-Files. Who's the one that hired Chris Carter of the X-Files to do a show?
Not sure.
So let's see. Chris Carter, X-Files, new series. So he's going to be on a mysterious new show for AMC. Forget it.
AMC. Okay. Yeah, they needed to put something up after Breaking Bad,
Yeah, Area 51. Now I'm Amazon. Amazon's going to do. It's called The After. So Amazon bought the rights to that. And by the way, Mad Men is pretty spectacular this season. So AMC's doing all right. But anyway, he's got a thing for Amazon. So Amazon's aggressively. So the difference between Yahoo and Amazon, I think, is Amazon says, "Oh, that didn't work. Let's push on it until we get it right." Amazon is relentless. They are a relentless company, and they are relentlessly cost cutting. They're always going to have a small profit, but they're going to have a profit, and that profit's going to get bigger as they grow in market share. Amazon's a buy. There's no question that long term, if I can get Amazon to fall, let's just take a look at a chart here. It's been all the technology stocks have been falling as of the time of this recording. Amazon's now down to 290. I was going to say $300. Earnings were 23 cents a share. The estimate was 22. They beat earnings estimate by 1 cent. That was a surprise. And that's pretty good considering that Amazon usually doesn't have any profit at all.
Yeah.
But they said they were going to lose significant money in the next quarter coming up, and that freaked everybody out. And it didn't really freak everybody out. Everybody's just down on the technology space right now. They're all harshing on the mellow. I'm a buyer. I was going to be a buyer of Amazon at $300 a share, and it's at $298. So I'm a buyer, Jason. Long term, I think Amazon is a $1,000 stock, and I think Amazon is a gigantic competitor to IBM and other technology companies in the technology space. I would not be surprised if one day Amazon spins off as a public company its web services division. I'd say within the next 4 to 5 years. That's theoretically possible, but it's not necessary. It's not like my prediction that Yahoo will be sold. In trading-related news, and we're going to get back to the reason that we brought all this stuff up, Jason. In trading-related news, I got tipped off yesterday that Forex Direct Dealer will be bought by Oanda, FXCM, or Gain Capital, and I don't know who won the battle. It's probably public now, but for some time now, I have suspected that FXDD is the Yahoo of currency trading in the U.S. For those of you that are familiar with currency trading and brokers, the major brokers are Oanda, Gain Capital at Forex.com, and FXCM. They are the majors. Then you have Interbank FX, IBFX, which is owned by TradeStation, which is owned by Monex, which is owned by God, and they're gigantic. They have it's like a tiny little thing with a giant monolithic company behind it, and I love their business model. I love Interbank FX. They're not as big as the other guys though. Anyway, FXDD I would have loved to have seen them bought by Interbank FX. I think it was a natural match. They're both great at MetaTrader. I would have loved to see that, but the company culture at FXDD is so wildly different than the company culture at just about every other broker that it was probably impossible. So FXDD's customers will be bought by another broker. They will be switched over pretty soon. It was pretty obvious they were just not innovating exactly in the same way as Yahoo. Good people. Reasonably good business model, but they were located in New York City, ultra expensive place to locate a business. Their business model wasn't significantly different, didn't provide anything massively special. They just weren't out there, Jason, really on the cutting edge, and they were kind of just doing the things that a company does to try to survive, and it just wasn't ever gonna work. So another Forex dealer bites the dust, and here's the lesson, Jason, and I want to talk about this. The lesson is this. It's not enough to just do what you're supposed to be doing anymore. Just stay on task with your trading system. It's not enough to buy a great microphone. As you see, Jason has a $300 Heil microphone, and he's got a mixing board set up that your whole setup is worth thousands of dollars. You know, the people, and we know a guy that makes over $200,000 a year just selling that stuff.
Yes, we do.
Yeah, so just selling the recording equipment isn't enough. You can't just have the recording equipment and start. You can't just follow a set plan anymore and have it all taken care of. It's not enough anymore to be Meyer with a website with games and email and whatever else. You have to be a first mover in something that's reasonably innovative. You have to stand out. You have to be willing to anger people, and you have to be willing to do something that's never been tried in your space. There's no difference between that and trading. You can't follow anybody else. You have to be your own kind of leader, and you have to think about combining things in the world of trading that are not ordinarily combined. And we'll save that expanded conversation for another podcast. But you have to think of yourself as an individual, but not as having pressure put upon you to be like everyone else. You can't do it. Second of all, it's not enough in the world of trading anymore, Jason, to think of stopping out and taking profit in the same ways. I've had a real change of opinion. And I want to talk about this on a future podcast as well, about this whole conversation, Jason, about stopping out early. You know, this conversation about you got to get out of your losing trades fast. You got to ride your winners.
Yes.
I am beginning to think that high frequency trading has blown that model up, and that Sean Campbell has stumbled upon some greatness. And I'm not even sure that Sean Campbell understands, from these humble words that he uttered recently, how much of a resounding effect it can have upon the world of trading. So I intend to call attention to his name. Sean, as we have mentioned on the podcast, manages his positions in the market like an inventory manager. He doesn't take a trading position as a unit that must be discarded immediately if it doesn't work, or must be held onto if it does work. He thinks of it in terms of widgets stored in the manufacturing warehouse. He brings them in at a price, and then he's got to unload them at a price. And he thinks of everything as coming into the warehouse as being he's got to manage the inventory. So there's no stop loss on inventory. I mean, you can throw away old vegetables and stuff like that. Sean's really thinking about this this is a breakthrough mindset that has existed in other places. There have been other models of this at Goldman Sachs. There have been discussions like this in the world of trading. But I predict that now is the time for that mentality, that mindset, that it is not just interesting, it is genius. It's breakthrough, like Amazon renting out its servers or Netflix hiring a superstar Hollywood director to create a series. I think, and you're hearing it here, and this is we're a dumb podcast, and it shouldn't be the place that you hear this, but I'm telling you, Jason, this is how it's done. You can't, with the way that brokers stop out trades, and with the unpredictability of how far something can go once it starts, that it can't always get to the profit target. You have to stop thinking of your positions or your trading systems in terms of stops and targets. You have to get away from that, and you have to start thinking about it in terms of managing an inventory of stock or of currency that you have to unload at another price that allows you to bring more into the warehouse, ship more out of the warehouse, take a bad price on it to get rid of it. You have to start thinking about it in a different way, or else you're dead and it's never going to work and you're just going to be Yahoo. And Jason, we never got to the topic that we were going to talk about today. So what are we going to talk about next time on the podcast?
Well, I've been wondering about this thing between, it's like a thing between gratitude, where you're, happy and pleased with what you have and so forth, versus ambition, where you're hungry and dissatisfied with what you have and you want more. And I'm really interested in that balance. And I wanted to talk to you about that because it seems like these two are contradictory.
Well, let's prepare some notes on that and record for the next Traders podcast. We've got a lot of topics coming up that we want to address. If someone out there has a topic that they're thinking that they want to talk about, how can they reach the show?
Well, they can email us at producer@traderspodcast.com, or they can leave their comment in the show notes for this episode.
All right. We look forward to hearing from you. I'm Rob Booker on behalf of the greatest producer in podcast history, Jason Piles. You're listening to the Traders Podcast. Well, I'm going to turn off the recording here. So for those of you that joined us on the video, hey, everybody. Jason, you want to say hi to everybody?
Hi, everybody.
All right.